All right, everyone. Today is Tuesday, September 29th, and welcome to Market Newsflow. We'll walk through the market news of the day. To kick things off, let's exude the muted tone that we saw across equity markets today. The S&P 500 and Dow were both down 48 basis points, and the Nasdaq had similar performance. Markets globally were pretty much similar. Nikkei was slightly positive, but all in all, pretty flat day. This comes off of the end of month rebound in equities, which we saw through the end of the week and ended up fading today. Not surprisingly, we've seen the 10-year continue to trade sideways, coming in between 65 and 66 basis points. Looking to the first thing on the list on the right, we see a tumble in the price of oil, with Brent falling to 42.05 and WTI falling to 40.25. WTI notably also changed hands below the psychological barrier of $40 a barrel. Brent is actually losing its premium over WTI, with both the Middle Eastern supply glut and dwindling European demand. This dwindling European demand comes in stark contrast to things we're seeing in the Americas with regard to the American kind of symbolic rejection of increased COVID restrictions, as more people are transporting themselves either by cars or planes and consuming oil. We see increase in demand. WTI actually traded at a premium to Brent in May, on May 29th, and this was the first time since 2016 that it had done so. That was when Congress had voted to end the 40-year ban on crude oil exports, establishing the U.S. as a formidable crude oil producer. Also exacerbating the supply glut, we see that Libya's oil ports have lifted a blockade. Libyan exports will be bringing 12 million barrels of oil to market in the coming weeks, as well as production adding another 500,000 to 600,000 barrels a day by the end of year. This should have a pretty substantial effect on the price of Brent oil, being in the European African region, the EMEA region. With regard to U.S. politics, the second item on the list, we've got a lot to talk about here. Obviously, we have the ongoing question of the Supreme Court, with President Trump nominating Amy Coney Barrett, a 48-year-old woman with strong conservative views and an anti-abortion viewpoint. Democrats are calling on her to recuse herself from any sort of ruling following the election if she does successfully navigate the appointment process. With regard to the first presidential debate, that is tonight in Ohio, and the New York Times also reported over the weekend that Trump paid a mere $750, that is $750, not thousands or millions, $750 of income taxes last year, while also fighting for a $73 million US refund. Trump tax returns also show copious amounts of foreign influence and autocrats spending money at his properties into the many millions. This definitely comes as he was praising them as president and using his Twitter account to exude praises. Biden also paid $300,000 US dollars in income tax in 2019, obviously in stark contrast to the mere $750 figure from President Trump. Nikola is quite a story. Obviously, you're coming out of the allegations of deception, and they're trying to showcase its own innovation and praise the high likelihood of their clean-powered trucks being able to get to markets. However, they did have the infamous advertisement campaign marketing video where they literally put a truck on a hill and let gravity do its magic rather than actually have any sort of technology that made some sort of formidable difference and actually move the truck. In addition, just today, after founder Trevor Milton had stepped down last week, he was also accused of sexual assault by two women. So across the board, see quite a mess with the company there. And with regard to job cuts, we see Disney cutting 28,000 jobs, mostly in their theme parks. This comes in line with airlines that received aid that were not allowed to fire people until October 1st, approaching that October 1st deadline this Thursday. So with that in mind, we'll look to see if there are going to be more job cut announcements on Thursday. And also, pilots at United took pay cuts instead of being fired, with the option to extend their contracts. So we'll see cost-cutting measures across the board, especially for airlines. Planeteer and Asana are two companies that have decided to pursue the direct listing route of becoming publicly traded companies on the NYSE. Planeteer had a direct listing reference price set at $7.25 and has an estimated valuation of somewhere between 21 and 28 billion US dollars. The direct listing for this data mining company that was co-founded by billionaire Peter Thiel will happen over the coming days, along with the direct listing for Asana, the workplace management software firm, which is also going to do this direct listing process this week. These are going to be the third and fourth direct listings following those from Slack and Spotify in the past year. All right, to move on, let's talk about the carry trade and how it's resulted from the weaker dollar. So the carry trade is the idea that you borrow in a cheap currency where you don't have to pay a very high interest rate to get money, and then invest where you can get a much higher interest rate. So the idea typically or historically was the yen carry trade because funding in the yen was so incredibly cheap and rates are now negative there. So the idea is with a weaker currency, you are funding yourself there and then investing in the corporate bonds, the sovereign bonds, some sort of local denominated bonds of a foreign country. So now we've talked about the dollar weakening across the board for the last couple weeks. So with that in mind, a lot of people are continuing to sell the dollar to buy local emerging market bonds, which are known in the FX space as exotics, and then rotating into higher yields. This comes off the back of the Powell Pledge, which says that rates will be kept near zero for the foreseeable future. If you look to the dot plots out of the Federal Reserve at the FOMC meetings, they project that out till 2022, 2023, rates will be either at zero or at like 25 basis points. So it's basically near zero for at least the coming few years. Obviously, this does come along with the global easing cycle. So we see things like central banks in Brazil, Indonesia, South Africa making rate cuts as well. So the idea, obviously, if you're borrowing in a cheap currency and you want to buy something in a higher yielding currency, you want to go into something that's really high yielding if you're going to make this trade. So with that in mind, low volatility options that are becoming more popular are shifts from the US dollar, selling the US dollar and buying the Korean won, Malaysian ringgit, and Russian ruble. Because these are less volatile, you'll get increased liquidity and get better spreads and better transaction prices. Obviously, when we're talking about volatility here, this is the 3-month at the money implied volatility of these options contracts on these FX pairs. If you look to the chart on the bottom right, we see the net long dollar positions. Obviously, because this is incredibly negative right now, this means that people are going short the dollar. One of the reasons that they could be going short the dollar, as mentioned here, is that they are participating in this carry trade. So they are going short the dollar to buy something else. That should make sense. All right, Evergrande, 恒大集团. So Evergrande is the world's most indebted developer. This is a company that issued convertibles under a 130 billion yuan deal in 2017. So it's the equivalent of about 21 billion US dollars. And they pledged to either list the Hengda real estate unit on a mainland Chinese stock exchange or redeem the debt. Evergrande owns the majority stake of Hengda, which is 63.5%. And the remainder is held by investors, including many state-owned enterprises. And that's definitely a pivotal part of the Chinese economy, something that differs from a lot of other countries. Also to note is that Evergrande is going to be rolling over 86.3 billion yuan of convertible debt. This goes along with finalizing arrangements with holders for a future 15.5 billion yuan transaction. Negotiations are ongoing for the last 28.2 billion yuan. This is pretty interesting to note. And the point of this whole situation is they're incredibly levered. They're the world's most indebted developer, and they have a leverage ratio of 10 times debt to EBITDA, 10 times total debt to EBITDA. Obviously, this is huge. They have this target to half its debt by 2022. However, they've fallen short of this target of retiring 150 billion yuan because they've actually been borrowing instead. Total debt has actually risen 4% year over year. And this is pretty interesting to note, given the circumstances of a letter allegedly coming out from the company saying that they did have a high risk of potential defaults, we see that onshore bonds trading was suspended amid this huge rage of heavy selling. In addition, these Hong Kong listed shares of the parent company, Evergrande, slumped to their lowest level since May. This caused the 2024 series of notes to fall to 85 cents on the dollar, quickly rebounding up to 87, and the 2022 falling to 90 and then rebounding to 91. All right, so fallen angels. This is one more very exciting topic within the world of fixed income. The number of them are high, but these are short of expectations. We saw ridiculously high expectations for junk bond issuance coming out of the pandemic, with Morgan Stanley reporting figures in the $300 billion range for the year 2020, and other firms such as Goldman Sachs going up to $500 billion US. So far, we've seen 230 billion of junk bonds issued in 2020. If you look at the chart on the top left, we see how this compares to even spikes coming out of the last Great Recession or the little bit of illiquidity in markets in 2016. We see huge jumps with more than double the amount of debt now, as opposed to coming out of the Great Recession. What's also really interesting to note is that 50% of investment grade debt is rated BBB, which obviously is the lowest rung of the investment grade universe. This has stayed constant through the pandemic and is obviously a huge portion of this grouping. These are bonds obviously of medium grade quality, including BBB plus, BBB, and BBB minus, which means they're just one rung away from being considered junk. It goes without saying, but different investment funds have different mandates that concentrate in investing in certain types of debt, so they can only invest in investment grade or only invest in high yield. And not surprisingly, the number of investors, such as pension funds or insurance companies, that can invest in investment grade debt is substantially higher than those that are only allowed to invest in high yield. With this in mind, when companies do fall and become a fallen angel, they see this huge drop in their price because it is just a demand shock because of this reclassification. Not surprisingly, if you look to the chart on the far right, that energy fallen angel debt is outpacing the rest of the market with more than 3 times more than 3 times the next group, more than 3 times consumer goods representing energy debt. This is coming off of oil prices, which are a result of huge falls in oil demand. Just to wrap up, looking at the chart on the top right, corporate debt as a multiple of earnings. This is net debt to EBITDA coming at 3.8. This, again, is so much higher than what we saw in the 2008 recession, which is pretty interesting to note because obviously that was not something that was caused by corporate debt. As we all know, it's something resulting from the housing market and over-levered positions there. So it's interesting to kind of note the risk exposure and the heightened risk exposure that we have today, given the already high levels of leverage by these companies. A reason that this could be happening is that you do have this buyer of last resort now playing in the corporate debt space and even playing with fallen angels, with the Federal Reserve deciding to buy and take long positions in these securities. All right, so that pretty much does it for the day. Look forward to seeing you Thursday and talking about the market news then. Thank you for listening and have a great evening.